Great. Well, thank you, Eric, and thank you all for sticking around. It's a pleasure to be here. It's great to be in the same session as Nevsun, because that's sort of our ultimate end game, to have a Tier 1 VMS deposit and control of a mining camp, district-scale mining camp. So we are a base and precious metals exploration company exclusively focused on jurisdictions within North America. Our premier asset, or flagship asset, is the Palmer Project. It's a high-grade copper, zinc, silver, gold deposit located in Alaska. We pride ourselves in our technical strength. We focus on jurisdictions where we've got experience and expertise, namely North American VMS and Archean gold environments. We also have a pretty good track record of securing strong deals with strong partners. That's allowed us to thrive in an otherwise pretty cruddy market the last few years. Option payments and management fees provide sustaining capital. We're actually cash flow positive right now and haven't financed in the last 3 years. Brought in over $1.4 million in option payments and management fees. So Palmer, it's a VMS project, stands for volcanogenic massive sulfide. You've heard about a couple of them today, but one of the consistent themes is they're high grade, high margin, low capex type targets. It makes them very attractive in virtually any metals market. We're at that exciting resource growing stage. We've got a deposit, and we're in that stage of growing it, where there's the opportunity for real rapid value appreciation. It's a district scale opportunity with pretty obvious multi-deposit potential. It's a stable, mine-friendly jurisdiction, excellent location, great access, and a real exceptional partnership structure. And then that deals with Dowa Metals and Mining. They're a major Japanese metals company. They operate the largest zinc smelter in Japan. The deal was signed in February of 2013. It provides Dowa the opportunity to earn a 49% interest by spending $22 million over 4 years in exploration expenditures. That includes cash payments, $500,000 on signing and $250,000 thereafter. But the real unique aspect of this deal is Constantine maintains 51% and is operator. That's virtually unheard of in deals in North America between a junior and a major, and it provides us a tremendous amount of optionality and flexibility and control. Dowa do have certain offtake rights, so that's on the zinc. It's at arm's length commercial terms, so really no negative there. We've got a guaranteed buyer at market price. And what this deal does is it allows us to take what's a pretty exciting deposit that's a bit small, and it provides us the capital to drill and expand and push it over threshold. So our initial inferred resource totals 4.75 million tons of 1.8 copper, 4.5 zinc, 29 grams per ton silver, and about 0.3 grams per ton gold. That's out of date. We've doubled the number of holes that have been put into this since that was the last estimate was calculated. And we're currently right in the middle of updating that resource, so stay tuned. Should have that out in the next little bit. The real key feature here is how do you compare this deposit that we have against other deposits. We know the metallurgy is good, the engineering's good, location's good, and the grade's good. So for us, it's about getting it bigger. Our grades compare very well against active mines throughout North America and elsewhere. And we keep pretty good company. To the south of us is Greens Creek. It's one of the world's richest VMS deposits, and to the north is Windy Craggy, one of the world's largest. So if you're going to go look for a VMS deposit, it's a pretty good place to be looking, and they're worth something. Just put the purchase price for Greens Creek on there as an example, $1 billion asset, and that was after being in production for 20 years. So this is a satellite map with our claim position superimposed on it. And the one thing I want to highlight here is our access. From our resource area, that red star, I could probably, the wind was right, throw a paper airplane and hit the highway. And from there, it's 30 to 40 miles to the port city of Haines. Both are open year-round. So fantastic access. You're on Pacific coast, shortest sightline to Asian smelting markets. And also the road access. There's active logging and placer mining on the property, edge of the property, and brings those log and road access right to the base of our resource area. It is rugged, and this is something that some people challenges some people's ideas about mining and mining costs and ability to develop it. But the reality, it's a huge advantage here. We've got steeply dipping zones that are tracking down towards valley bottom. And to access this, you can go in laterally into the mountain with short lateral development. And so your upfront development costs and your long-term production costs should be much lower on a project like this. Also kind of wanted to highlight here the geology a bit. These types of deposits, they form on the sea floor. in blankets and layers. To get from the seafloor to the top of a mountain, you got to fold things up, and you break them up with faults a little bit. And so in this image here, we've got our RW zone, which is the flat dipping limb, and the south wall zone, which is our steep dipping limb. And I'm just teeing you up for the later slides here. Another key feature here is actually this terrain. We're able to keep drilling this deeper because as the zone goes deeper, the mountainside is kind of sloping away. So it still remains very accessible to drilling from surface. So looking at that south wall area, this highlights zone 1 and 2, our south wall zones 1 and 2. What I want you to get from this is just the widths and grades that we're seeing. So lots of plus 20 meters, 2.5 copper, 9% zinc, etc. So consistently wide widths, good vertical continuity, and good lateral continuity. And what that means is very attractive economics for mine engineering. So moving into 2014, this is that last view was a cross-section. This is more of a long-section view looking at a 3D model. The red is the resource that was defined that I quoted earlier. The yellow there is a big geophysical anomaly, much like in the Nevsun talk. This is believed to be a projected extension of the sulfide zones. But you want to go out there and drill these. You can't quite trust them for sure until you put a drill hole in. But the resource as we had it was wide open at depth. 2014, we went after the depth extent of the system with a focus on that big yellow plate that you see there. This is essentially the same view. It's been simplified a little bit. It's not 3D. So our south wall zone 1 outlined in the red dots and the red outline up top, zone 2, 3 in the blue dots coming down, and the yellow plate. And those big stars are drill intersections from 2014. So our first real penetration into this thing was 150 meter step out, hole 54, 22 meters at 2.5% copper, 4% zinc. We later followed that up towards the end of the season with hole 65, 89 meters at 0.8% copper, 5% zinc. And that's a porphyry width intersection in a massive sulfide system. It's a phenomenally wide massive sulfide intersection. And the significance of that is that you can build tons very quickly. Massive sulfides are dense. They got a specific gravity of about 4. To put that into perspective, each 100-meter block on that section there, that grid, a true width of 25 meters with an SG of 4, that's 1 million tons. So you can build tons pretty quickly. True width on hole 65 was closer to 65 to 70 meters. So we're real excited. This is wide open, and our focus in 2015 is to keep expanding the system. This is just to kind of expand on that story a little bit. This is a schematic that was done by a master's student on the project of a typical ore lens. You have this big feeder system that comes up into a lens that zones out. On the fringes, they're more zinc-rich. In the core, it's more copper-rich. It's that copper-rich core that's usually conductive. The zinc-rich stuff isn't. Notably, the vast majority of our deposit actually doesn't conduct. But the takeaway from this slide is that what we've hit, we didn't see any real appreciable stringer zone, which is telling us we're not actually in the guts of the system yet. So we're pretty darn excited about our follow-up drilling this summer. This here is just, what we tried to do is I talked about the folding and faults. This is a reconstructed model. So we've unfolded the system and restored the offset on the faults. And the objective was to give you an idea of what that primary morphology was of the deposit when it formed on the seafloor. And the first thing you get, it was pretty extensive. It's about 1.5 kilometers long. The other thing you get from it is some trends, and those trends are useful after you unfold it to kind of help vector your next drilling. There's 2 dominant trends we see here that we'll be following up on. The other feature I want to point out on here is our drilling in 2014 expanded both ends of it, so it's wide open to further expansion. Most notably, hole 65, that 89-meter intersection, that's twice as thick as anything we've drilled to date on the property, and it's at the extremity of the area drilled. So a lot of upside, in our opinion, to keep expanding this deposit. Similar theme to Scott's talk. Those in the industry know that these deposits occur in clusters, or it's common that they do, whether it's Flin Flon, Noranda. In this case, I put an example of Hokoroku District, because that's where our partners have been mining for the last 120 years. It's a 140 million ton camp with numerous 5 to 50 million ton deposits. We're in the exact same environment, and we control the entire district. And we've only really scratched the surface with our drilling. We're on our 60-odd hole within the zone itself. And all of those, we found dozens of ore grade prospects around the property. So lots of potential to keep adding resources and new deposits. On close, I just want to talk about our catalysts and goals for 2015. I mentioned already the resource update. We've doubled the number of holes. Those were all step out, so it's going to be bigger. I don't know how much bigger, but it's going to be bigger, and that should be out here in the next couple months. We've got our budget for 2015 with our partners, and this is all expenditure by our partners right now. That'll be announced shortly. And the focus is going to be to continue expanding the existing resource with very aggressive big step outs on the zone. We're also hearing a lot of talk that the zinc market is in pretty good shape and is set to take a run. And there's not that many guys with the kind of exposure to zinc in the exploration business that are active out there. So we think we're a pretty good candidate. Thanks very much.